Today is December 4th, 2023. I'm David Berlin with Blockchain Journal. This is the Blockchain Journal podcast, and I am standing here with James Knox. He is managing director at Aon, and Aon is a moderator here of one of the panels at the Boston Digital Assets Forum. So, James, thanks very much for joining me on the Blockchain Journal podcast.
Pleasure, David. Thank you.
Yeah, so I was inside watching the last panel that you moderated. Did a great job, by the way, and a lot of this panel's discussion centered on the idea of regulation, and I thought this is pretty interesting because what we're seeing out there is how all of the enterprises and global brands that are investing in blockchain, they seem to be following where there is regulatory certainty. We see a lot of activities in like Germany. You see stuff going on in India where there's a little more regulatory certainty, not so much here in the US. You want to comment on that a little bit?
Sure, David. Thanks for that. So yes, we are seeing jurisdictions around the world outside the U.S. Offer investors, financial institutions, more regulatory clarity in the digital asset space. So it's not surprising then that the money is going to go, investments are going to go, where there's more regulatory clarity so people know how their investments are going to be treated by the local regulators.
Is it just investments or is it other activity? For example, just adopting blockchain as a platform, because it's kind of hard to adopt blockchain without also, for example, holding some crypto because you have to pay the chain fees and all of that.
It's much more than just investments. For instance, there was an announcement several weeks ago that Wisdom Tree, Oasis Pro, great company, JP Morgan, Apollo, they developed a platform to tokenize assets, right, on the blockchain. This was done under the auspices of the Singapore Monetary Authority, not the US. Reason for that is very simple. In Singapore, they have clear guidelines offered by legislation and regulators there on how a digital asset company can operate, in that jurisdiction. And because of that, it's going to attract companies who want to set up shop in Singapore, and that'll be beneficial for their investors.
Yeah, you're talking about Project Guardian, right? Which was run by the Monetary Authority of Singapore, and they did a whole bunch of prototypes, and they got many companies, multinational financial firms like JP Morgan from around the world involved in those pilots.
Correct, but also it's just not Singapore. You look at Europe right now, European Union, they're coming out, they promulgated the rules called MiCA. MiCA is extremely broad, but also gives really good, clear definition of what you can do and what you cannot do in the digital asset space. MiCA touches NFTs, custodians, exchanges, wallets, and that's what's desperately needed here is that clear regulatory certainty of how you can operate in that space.
Yeah, I notice, like, for example, in Germany, you see some of the biggest German banks, Siemens, they've been tokenizing stuff, so that's another place it's actually more crypto friendly in Europe than some of the other places that are covered by the European Union.
Correct, and it's just not tokenization. We mentioned on the panel stablecoins. Stablecoin issuance is growing, stablecoin usage is growing, and again, looking outside the U.S., you're looking at MiCA, they've given very strong edicts and promulgated rules on how you can operate with stablecoins in that space.
Why are stablecoins getting so much interest right now among regulators? What's the big deal with stablecoins?
Because stablecoins can be a very valuable asset. Now, we're not talking algorithmic stablecoins. They are very dangerous. What we're talking is stablecoins that are pegged to the dollar or pegged to some collateral that is 100% supporting the stablecoin. If you've got that, it should be as good as gold.
Yeah, but you say they're very valuable, but at the end of the day, they're pegged to an asset, and they're not really changing in value. They are valuable in some other context. What's that context that they're valuable to?
The context is usage, right? They can instead of someone issuing an instrument in U.S. dollars, now you can do it with the stable coin. It's much more efficient, and it can be a lot less expensive than dealing with U.S. dollars.
Look at, for example, some of the work that JP Morgan that you cited is doing with their Onyx platform, Coin Systems. In particular, they are leveraging the low cost and quick settlement times, the 24/7 availability. Are those the big three advantages over traditional finance rails?
100%. Speed is a huge factor. Efficiency is a very big factor. These factors are going to change finance system as we know it.
Now, do you think the old financial system is going to be completely replaced, or are you still going to have that?
We'll always have the old financial system in place, but the financial system that you're going to look at 5-10 years from now is going to be almost unrecognizable to what we're working with today.
Yeah, well, that would be interesting to see that happening. What is Aon's role in all of this?
Aon provides consulting, advice, and insurance to most of the players in this space, most of the companies in digital asset and the blockchain space. We're providing insurance for them. We're providing advice, consulting on how they can protect themselves in the sometimes choppy waters.
What do you mean by insurance? Do you insure against volatility or something else?
So while we're not actually the insurance company themselves, we provide access to insurance to protect themselves against cyber threats, protect themselves if they're holding on to digital assets in case it gets stolen, and other areas.
Okay, so that if somebody else gets the keys to the wallet or something like that.
100%, yes.
Yeah. Okay, well, James Knox, Managing Director at Aon, thank you very much for joining me on the...
Pleasure. Thank you very much.